BAT released the numbers for the year ended December 31st, 2022. We're delighted to have the CFO, Bwana Kipkemoi. Karibu sana.
Asante sana.
Thank you for your time this morning. So let's start from here. I looked at your numbers and I thought, when I looked at the top line and I saw the growth vis-a-vis the growth in indirect taxes, it looked to me like BAT is cutting back on its footprint in the domestic market, focusing more on the export market. Is that a fair assessment?
Our business is predominantly made of two segments. One is the domestic market and the other one is the exports business. So definitely we benefited last year significantly from the exports business, but also we had pricing benefits on the domestic market. We are not divesting, or we are not slowing down on the domestic market. What we are seeing in the domestic market is that we have a little bit of pressure, predominantly coming from the excessive and frequent tax increases. As you know, over the last 12 months or so, there was about 21.3% excise increase, which then forces us to pass on the excise to consumers, drives up prices of legitimate products, and then it pushes some of the legitimate volumes into illicit.
I see. So still on the subject of the regulatory environment, looking at the numbers for the year ended DEC 2022, which was quite a turbulent year from an excise standpoint. Looking into the year ahead, are you more optimistic around this issue of regulatory overreach, if I could call it?
I think there are two things if I look forward. First, the signs that we are seeing. The first one is on excise tax stamps. As you know, there are draft regulations which have been released, so we anticipate that there is going to be a significant increase in the cost of excise tax stamps. For tobacco products, the excise tax stamp is increasing by almost 80%, which is unsustainable. Now, that does two things. One, we have to pass it on to the consumer, which puts more pressure. The second one is from an excise changes perspective. As you know, specific excise rates increase in two ways. One is there is the inflation adjustment, which comes every October, and then there is a ministerial statement, usually in June. Now, we have always advocated for a more predictable and stable regime from a fiscal policy perspective. If you look at the frequency, like last year, if I take an example, in November 2021, in July 2022, and in October, we had excise increases, which is obviously unsustainable, coming almost 3 to 6 months apart. Now, there is the inflation adjustment. Our position is that you need to have excise increases spread over, let's say, 2 to 3 years, but pegged on inflation, as opposed to having an excise hike on already a base, which is already adjusted for inflation. So I am waiting to see what the new government will do from an excise policy perspective, but I would encourage them to adopt a more sustainable and more pragmatic approach, where you allow the industry to be able to recover from the excessive excise hikes that we have seen, which is really a plus on their side, because when you leave excise rates stable, or when you don't take shocks, it allows legitimate volume to grow. Now, what that does is it increases excise revenue. We have a situation where we have significantly increased excise rates. If I give you an example, from 2019 to 2022, a 46% excise increase, but the excise revenue goes down. So you have reached that point where an increase in excise rate does not necessarily lead to an increase in excise revenue. So it's time to rethink that strategy. And we believe from an industry perspective, we have sufficient evidence to show that if you leave excise rates stable, or if you don't take excise hikes, then it allows the industry volumes to grow, it allows government revenue to grow, it allows us to go after the illicit. Then we start focusing on sealing the loopholes of illicit trade. Just to give you a flavor, illicit trade in tax-evaded cigarettes, for instance, is at around 26%, which has doubled over the last 2 years. That denies government, in our estimation, around 6.5 billion shillings annually. So it is something that we need to look at. I hope for a more pragmatic approach. I hope for a more stable regime, and I certainly hope that there are no excise hikes or excise increases this year.
So you're cautiously optimistic?
I'm cautiously optimistic. Yes.
Your cash position, Bwana Kipkemoi, I looked at it, and whereas it still looks solid at 2.4 billion, I think, if I got it right, year-on-year change is 22% or so down. And is this a function of just your cash cycles, or should investors now begin getting worried about this?
Thanks for that, Julian. Our cash position is very good. Now, just to explain a bit, we measure our cash position by our cash conversion. So the ability to convert profit to cash. Yeah. If you look at that conversion, we are consistently over 90%. Last year we were at 93%. The previous year we were at around 92%. So pretty stable from a cash conversion perspective. So we have a very good ability to convert the profit that we make into cash. The cash balances that you see year on year is really determined by the working capital movements at each point. Yeah. So you'll find, for example, that at the end of that particular point, we had more receivables, depending on the sales cycle, than it was the previous year. But from a cash perspective, I think we are on a rich cash position, and we continue to have that ability to be able to generate cash. And secondly, if I look at the medium to long term, I mean, from an investor perspective, yeah. Traditionally, from a BAT, we have always adopted a very good and healthy dividend policy. We pay upwards consistently over the last 3-4 years. We've paid around 82% dividend payout ratio, which we have maintained consistently. From a 2-3 year horizon, I don't see any significant capital intensive projects, yeah. That would make that policy to shift significantly. However, we obviously business circumstances will play out, but I'm confident that we are in a very good position from a cash perspective.
Actually, I think the dividend side, the sweet spot is normally on the yield more than the payout. But let's talk about what you've just mentioned. You don't see any capital-intensive undertakings. From your portfolio diversification into the non-combustibles, how is that looking? I think it's about 8 months since you relaunched the nicotine side pouches.
Yeah. So I would say we are making very good progress on our strategy. So remember, our strategy is to create a better tomorrow. And we create this by focusing specifically on health, environment, society, and governance. So our investments the investments that we are making is to support that strategy going forward. Now, from providing alternatives or providing our adult consumers, adult smokers, with alternative innovative products, we took a decision a couple of years ago to invest in a modern oral nicotine plant to provide, this is tobacco-free oral nicotine pouches. And as you said, rightfully said, last year, in half two, we re-entered the market following the definition of an appropriate regulatory framework for it. And we have seen encouraging results, which then will be able to support the commercialization of the factory. We committed around 2.5 billion shillings. We spent around 1.5 so far. We believe that that is sufficient to last us in the short to medium term. But more importantly for me, I think it demonstrates that, number one, an appropriate regulatory framework is important for investment. Yeah. Because we have taken the bold decision to invest in manufacturing in Kenya. Kenya is known for skilled labor, and we are very innovative people. So the group, the BAT group, supported or approved our business case to say this is the right place to put the first oral nicotine pouch factory in Africa. And with that confidence, we are keen to demonstrate, or we are keen, not only from an organization perspective, but I think also from a country perspective, that that was the right call. And the way we are going to do that is first, make sure that the fiscal framework is appropriate. I have a bit of concerns on that, considering that if you look at over the last 1 year, on modern oral nicotine pouches alone, excise has been increased by 33%. Yeah, which we're saying as we invest in new categories, then you need to give us time, or you need to give us a break so that we are able to commercialize and we are able to stabilize this category, because it brings it's foreign direct investment. It is modeled on an exports model, which means that we continue to generate forex for the country. Just to give you a flavor of how we do from an exports perspective, over $100 million annually is what we generate from our cigarette business. And I see that if this is successful, I see that only growing into the future.
Over $100 million annually. You're one of the few businesses which, in the prevailing environment of FX tightness, you're really not complaining about FX risk.
We are not complaining because we have a natural hedge, but we are complaining because the volatility of the FX affects input costs. So just to explain, we generate over half of our revenue in USD because of the exports business. That means that all my dollar commitments or payments, I'm able to fund from internally generated FX. Now the problem is, as you have volatilities on the FX rate, then the cost of imported products or raw materials that we use goes up and up every time. Yeah. So that's a concern. However, what we've done from a business perspective, we have been very keen and very good at productivity initiatives, or making sure, for example, that we localize the input costs as much as possible. So we try to source materials locally as much as possible so that we are able to protect ourselves from those headwinds. Not only that, but also to support local manufacturing. So we have been a very strong integrator in making sure that we support local industries. We are able to create capacity and capability in our partners so that we mitigate that risk. So I would say, based on our business model, yes, it is not as much as concern as it would, for example, someone who doesn't generate dollar inflows, but then it is important that we manage, as it were, manage the rate hike, which will mean that our cost of inputs remains stable over time.
Speaking about localizing some of your input costs to try and mitigate these pressures you're getting from the FX side, what proportion would you say, when you look at the numbers for the year ended December 2022, has been localized vis-a-vis the previous year, just to give us a perspective of how you're doing that?
So I would say over that year, we have, and just to put it in buckets, we have significant inputs is leaf, leaf raw materials, so which is tobacco leaf, and also we have wrapping materials. So a lot of the wrapping materials, for example, the packs that we use on cigarettes, we have localized those over the last 2 years. That constitutes just under 5% of the total wrapping materials cost. But more importantly for me, the exciting part is the fact that we are working on ramping up local production from a tobacco perspective, tobacco leaf perspective, to be able to meet the demand, not only for domestic volumes, but also for exports volume. What that does is that it enables us to be an integrated chain. As you know, we have about close to 2,000 farmers who we contract to grow leaf, and we make sure that we support them through the journey to be able to produce. What we are seeing is it is better for us to continue supporting those farmers so that we can get more leaf locally. Yeah. Currently, we don't generate enough for both local and export, but we are working on that, and we have been increasing over time. I think the key for me is, I'll come back to it and say, the sustainability of the domestic business is critical in enabling all that ecosystem. Because the ecosystem for exports, the ecosystems for farmers, the ecosystem for trade partners is hinged on a successful domestic business. And a successful domestic business is hinged on making sure that you have appropriate regulation, which is predictable. Two, from a fiscal framework, you need to have predictable and reasonable rates of change in excise, for instance, to make sure that you have a stable business over 2 to 3 years from an investor perspective.
Okay. Closing this conversation, so you've spoken about commercialization of your alternative products, and I'm just curious, how much runway do you see ahead before you really hit that sweet spot where you would say, now we're comfortable with this?
So from when we committed to the investment, we model our business plans over 5 years. So we say in the next 5 years, we believe that these investments that we have made will be able to generate sufficient revenues first for us to be able to make it a viable business. That's number one. But number two, I think the key unique aspect about our business is, as I've said, is an exports business. So even the modern oral nicotine factory is not just for BAT Kenya or the domestic business alone. It is also hinged on exporting to other countries. But as I said, you have to have success at home. Yes. Yeah. Once you have success at home, that it enables you, it creates the platform for you to be able to go outside. So I would see in the horizon between 3 to 5 years, that's where I see the sweet spot. It is an investment phase, but we are comfortable and we are confident when we look into the future that we should be able to achieve that. I think the other thing that gives us confidence is from a group perspective, we've seen really this thing picking up, and we have seen also the investments behind the alternative products or the more innovative and more, I would say, risk-reduced products, alternatives in the group, really picking up over the last couple of years. So we have every confidence to believe that Kenya will follow suit.
So maybe my final question, you mentioned the initial commitment was 2.5 B, you have deployed, I think, 1.5. In what horizon do you see yourselves deploying the remaining 1 B?
I think the remaining 1 B will depend on several factors. First, success here at home and our ability to, now once we have that success, to get additional volumes from export customers. I forecast that will take us around 3 to 5 years, and then we'll be able to then to utilize the capability and the capacity that we have already built. So I would say between 3 to 5 years, that is when we will start requiring to ramp up the capacity and capability that we have. But for now, over the next 3 to 5 years, I think the commitments that we have made, we need to demonstrate confidence that we are able to commercialize that. We need to demonstrate confidence that we are able to make it work so that then we can get more runway down between 3 to 5 years.